Hey, what's up guys? If you're buying Bitcoin in $33,000 and selling in $35,000, you are overlooking the bigger picture. In this video, I will explain how Bitcoin can reach $340,000 in just few months. Then Michael Saylor will explain why Bitcoin is not in the bubble and is just getting started. Let's start with the Bitcoin market. Yesterday we had a major pump, but today BTC deflated a bit to its previous price level. As of the time of this video, BTC is trading at around $34,000 a coin. If BTC can hold this support level, then we might see a gradual increase upwards towards its new all-time high. Yesterday we saw a 20% Bitcoin pump where Bitcoin increased to more than $38,000 a coin just before Elon Musk changed his Twitter bio to only one word. And you guessed it, it's Bitcoin. This is just very humbling when the world's most richest person embraces Bitcoin and actually not really talking shit about it, just like many other billionaire investors do. When the Bitcoin pump occurred, the BTC spiked by 20%, close to $260 million short positions got liquidated. Great, I'm wondering who is short selling Bitcoin. Maybe it was Bill Gates. Just kidding, he would not dare. I hope all these short sellers will learn the lesson, especially those who short selling GameStop. Short selling hedge funds have suffered mark-to-market loss of $20 billion year to date. Still, short sellers mostly holding onto their bearish positions, or they've been replaced by the new hedge funds willing to bet against the stock. Malvern Capital was nearly wiped out entirely last week because it placed a large bet against GameStop. Soon after that, the famous inside trader Steve Collin had to step in and bail out Malvern Capital. GameStop pumped from $40 till $500. It increased by 12x within 6 days. This is insane. But we all know that this is not sustainable. I have never short sell in my life, and short selling is against my fundamental principles of investing. But I'm not going to lie to you guys, to short sell this pump is very tempting. Let's go back to Bitcoin. As we know that Bitcoin miners produce 6.25 BTC per block every 10 minutes. That is 37.5 BTC per hour, and that is 900 BTC per day. So in 2021, there have been mined 27,000 BTC altogether, while Grayscale Bitcoin Trust bought just in 2021 for the past 30 days 40,000 plus BTC. So they bought 30% more BTC than it has been produced. And this is just one company. I can imagine how many BTC PayPal and other companies bought that they want to store Bitcoin as a treasury reserve asset. I don't know who's selling right now, but it's definitely not me. I cannot even imagine selling my Bitcoin. In addition to that, Bitcoin balance on exchanges continues to decline. 1/8 of the balance on exchanges is again moving lower and lower, and it almost back to the low level from earlier June 2020. Strong outflow took place in $27,000 to $33,000 range in late 2020, which is associated with the strong institutional buying. Here is very interesting chart. This chart represents Bitcoin unrealized profit/loss, and horizontally this chart is divided by stages of market sentiment. Net unrealized profit/loss is a difference between relative unrealized profit and relative unrealized losses. It can also be calculated by subtracting realized cap from the market cap and divide the results by the market cap. As we can see that here net unrealized profit/loss got rejected just before the euphoria stage and was sent back to the belief or denial stage. We already seen something similar before, didn't we? Yes, we did. In mid-2017, exactly the same scenario played out. Net unrealized profit/loss was about to break into euphoria stage, but it got rejected and sent back to the previous stage. However, soon after that, Bitcoin increased by around 900% before reaching the top of $20,000 in late 2017. Well, right now we are at very similar position. Guess what would happen if Bitcoin would increase by 900% from this current price? Come on, take a guess. Do some math. Right now, let's say that Bitcoin is trading at around $34,000 a coin. If BTC increases by 900%, that would be 10x. And therefore a single BTC would be at around $340,000 a coin. In that case, you will need only 3 Bitcoin to become a millionaire. So, as we know that history does not often repeat itself, but it does rhyme. so we will see what will happen. Now, let's take a look what Michael Saylor has to say to those people who think Bitcoin is a massive bubble. Let's take a look.
Well, my answer is none of them have ever considered Bitcoin as engineered money on an engineered monetary network. Electricity wasn't a bubble. Automobiles weren't a bubble. Aqueducts weren't a bubble. Airplanes and airlines aren't a bubble. You know, we spent massive amounts of money on communication system, in order to deploy the telephone, the telegraph, the mobile phone, television. None of these are a bubble, right? And in this particular case, Bitcoin is a monetary network. They simply don't understand that it's a monetary network. Once they understand, and maybe they'll never understand it. There are plenty of people that thought, that made fun of Henry Ford. What is this with standardized automobiles? John D. Rockefeller had Standard Oil. He standardized oil. Was that a bubble? General Electric, general electricity to your home to power up your appliances. Is that a bubble? Right? General Motors. That's everybody is a standard motor. We're replacing the horse and buggy. Is it a bubble? And the answer is no, it's not a bubble. It's an engineering breakthrough. And eventually everybody in every company on earth is going to be wired into a monetary network because it's thermodynamically sound and it solves a problem that everybody has. Once they realize it solves the problem, and maybe they won't ever. There are people that don't have electricity in their houses. They thought, there are demons that were going to invade their kitchen with the thing. And I suppose you find people that get shocked by electricity and they're still afraid of it and they never gave up their horses. But no, it's not a bubble, it's technology. How long did people object to noisy automobiles, and how long were they afraid of electricity, and how long were they afraid of elevators and tall buildings? I mean, there are people that didn't want to get in elevators for a while. I suppose probably it's a decade. Like it takes a decade for people to adjust to these things. And, you can't really go much faster than we're going. Bitcoin is appreciating at 200% a year for 12 years. It's appreciating at 300% this year. I kind of find it hard to, how many big tech networks grew at 100% per year for a decade running? Like, this is a big tech monetary network that is expanding in excess of 200% a year. So you can't really ask it to expand any faster. I think that for the next decade, we're just going to see the expansion of a digital monetary network that is Bitcoin, and people are going to probably resist it and fear it more as it grows, because when no one notices it and cares about it, they don't have an opinion. But when people come into your neighborhood and they start wiring their house for electricity, you start complaining about all the ditches they're digging and all the obstructions in the road and all the power lines. And then you're worried about the power lines giving you cancer. And then you hear about someone getting electrocuted, and then someone drives a noisy automobile down the street and the kids are playing in the street and you worry about it. There's going to be a lot of pushback, I suppose, and it'll be natural, but it's not going to change the inevitable, which is the world needs a digital monetary network. It's a $400 trillion problem. It's an idea whose time has come. You're not going to be able to stop it.
I agree with Michael Saylor. If you look at the Bitcoin at the very long time horizon and compare it to the most important innovations in the history, such as innovations of electricity, discovery of Standard Oil, manufacture of cars, airplanes, and most important one, discovery of internet. When do you remember the last time you saw those innovations in the bubble? But yes, we did had a dot-com bubble, that is internet bubble back in 2000. But was it really a bubble? Yes, Amazon stock dropped from $80 to $5. That's a 95% drop. But look at where Amazon is at 20 years later. Right now it's at $3,200. If you are paying attention to the short-term fluctuations and trying to time the market, you are overlooking the big picture and essentially just wasting your time and energy. I just do not understand why majority of people so short-term focus oriented. When did Jeff Bezos sold his stock because it was in a bubble? When did Elon Musk sold Tesla because it was in a bubble? When did Mark Zuckerberg sold Facebook because it was in a bubble? Well, the answer is never. For the follow-up, Michael Saylor just recently had a great interview with Laura Sheen, where she asked him if he's planning to take some Bitcoin off the table when BTC reaches the top. Make sure you watch this video till the end. Very important lesson must be learned. Let's take a look.
And you've said that you didn't buy the Bitcoin to sell it, but would MicroStrategy ever take some off the table when you sense the market is at a top and then just buy in later when there's another correction? Or do you just plan to hodl through all the cycles, and weather those, whatever 80% downturns when the crypto markets are in a bear market?
Yeah, again, I just disagree with your characterization. I don't expect an 80% downturn. I don't think it's a speculative asset, and I don't think you can quote unquote take money off the table. You're speaking like a crypto trader right now, right? Yeah, I mean, maybe you're doing it just to represent their interest, but I don't see the world that way. I think that Bitcoin is sound money. It's the technically superior asset class compared to the dollar, the euro, the peso, the bolivar, compared to a stock index, compared to gold, compared to silver, compared to everything you can conceivably buy. It is technically, thermodynamically superior as an asset. So when you say things like that to me, and maybe you just do it just to see what I'll say back, I just imagine you preaching to me in Argentina while you're asking me if I'm going to sell the dollars and buy pesos back again as the peso sleeps from 20 to the dollar to 40 to the dollar to 80 to the dollar. Or if we're in, Venezuela. I mean, you think a Venezuelan company is going to quote unquote take some money off the table by selling their US stocks and their US dollars to buy back into local currencies? Or then, in Zimbabwe, you think they would take money off the table, right? The point is, if you have the superior asset, it's going up forever, Laura. Forever.
Right. I mean, right. But I mean, we can all look Bitcoin sort of as numerous investors have talked about it, kind of breathes, after having the next year and a half after it tends to go up. And then after it reaches some kind of bubble, it kind of sighs a little bit, and then then after the next halving we see it go up, but so it's this kind of up and down cycle, but the overall trajectory is up. So, and it's not, these are on Twitter people were asking me to ask you this as well. I think it's a perfectly natural question to ask.
I think I don't think Bitcoin is volatile if you're an investor. If you're a hodler, if your time horizon is 1 year, or if it's 1 year, you're a short-term investor. You can find 2 or 3 times in the last decade when it wasn't great, but it wasn't awful. If your time horizon is 4 years, you can't find a time when it wasn't working. So I think, just a normal, ordinary, responsible investor with a 4-year time horizon will look at it and say, this is very boring. Right? It's exciting if you're a trader or a journalist, and if you're on Twitter, and if you want the news to change every day, people, and I feel like on Twitter, we've got a hyper-inflammatory, a high-speed, short time preference. I have to have an opinion every day or every week or every month. And that means everybody's always generating news. And they're all, if I take anybody on the world, and if I take a microscope, and I zoom in, and a magnifying glass, and I zoom in by a factor of 1,000, I'll eventually find a blemish. If you look at Bitcoin trading every week, you'll find a blemish. If you look at it every day, you'll find more. If you look at it every hour, you'll find more. If you look at it every minute, you'll find plenty. But if you zoom out to a decade or 5 years, then you'll have a different view. I really take issue with everybody that attempts to apply some statistical model. I'm not a trader. By the way, to be clear, trading is speculation, and traders see the world in short-term moves, and they're always, and maybe traders love volatility and traders love controversy. And traders love this debate because it creates that volatility. But this is an engineering issue for me. This is the year is 1910. People are wiring their houses with electricity. And you're asking me at what point I'm going to turn my electricity off, or you're telling me how eventually people are going to get tired of electricity. And then you're telling me that wouldn't I really want to convert back to horse and buggy and manual labor to take some off the table because electricity is a scary speculative thing. And I'm like, no, it's running water, it's electricity, it's automobiles. It's not a fad, it's the future. It's not a bubble, it's capital flow. When all the money is leaving the peso going to the dollar, that's not a bubble in the dollar. That's capital flight from a collapsing asset or a collapsing currency that people have lost confidence in. Just like the stampede to the internet. Like, would you ask a company, when are you going to stop using the internet? Are you going to stop using it in a quarter because you've used too much electricity and internet? And I say, and you're like, well, I noticed that your Facebook or your Twitter hits were going down or they weren't as high, so you just have to turn off your thing. My view is this is all just short-term technicality. And by the way, I don't think there's a single trader with all the data in the world that can predict the future. Like, for example, you're going to go and pull every line of data of every second. If you knew every trade of Bitcoin since 2010 to today, how would that be a better indicator of the future if the future is based upon things that are changing? It's like, this is the thing I said to Keith McCullough. Keith wanted to talk about quad models and correlating Bitcoin performance to the CPI and inflation and deflation, and he's crunching numbers. And just like the Fibonacci retracement is not going to determine the future of Bitcoin any more than the Fibonacci retracement is not determining the future of electricity, right? And inflation is not going to determine the future of running water. And if the economy stops inflating, or if the CPI goes up by 3 or goes down by 2, it is not going to stop a tidal wave from blowing into your beach. If you're standing on the beach and there's a tidal wave coming, the first order issue is that's a tidal wave. And you're going to tell me, well, in the last decade, all of our statistical models didn't predict a tidal wave, and there's or something. It's like, it's irrelevant because it's an engineering phenomena. So a trader that wants to preach to me about what they think should happen based upon 2017, in my opinion, is irrelevant, right? And let's come back to the key point. If 10 billionaires choose to buy $5 billion or $1 billion or $2 billion worth of Bitcoin each, all of your models are irrelevant. All of your history is irrelevant. It's like everything you think how things are going to work out. And how about all the statistics of New York City for the past decade? How relevant are they to predict what happens in New York City this month?
Right.
Not relevant at all.
Right.
So traders, I can't predict the future. The only way, trading is not a way to make money, by the way, in my opinion. The people that make all the money are people that predict the future. Henry Ford, right? John D. Rockefeller, right? Andrew Mellon. What did they do? They invented aluminum. They invented oil. They brought us cars. They brought us electricity. Andrew Carnegie brought us steel. Mark Zuckerberg, not studying some statistical model. How did he get rich? He kept Facebook stock. He didn't sell it.
Right.
Jeff Bezos, he kept his stock. So at the end of the day, none of this statistics matters. None of the trading matters. None of the volatility matters. These, people that are living in their little world, studying their Fibonacci retracements and preaching with incredible conviction about the upcoming expected 60% retracement or 80% retracement, they're overlooking this fundamental issue, which is if Bitcoin is a digital monetary network, and if enough people with money and power decide to adopt it, it's going to go up and increase by a factor of 100 or 1,000, and there's nothing you can do to stop it. And its past is completely irrelevant to its future,
Hmm.
right? So looking back makes no sense. The only question you got to ask yourself, Laura, is, and here's the question you got to ask: how much Bitcoin is Square Cash going to sell in 2021 on the mobile app? That's the question.
Right.
How much is PayPal going to sell?
Yeah.
Because PayPal and Square are going to obliterate everybody else's opinion about what they think should happen, right?
Yeah.
And so, like, I think that too many people in this industry have been around too long, and they're captured by their past, and everybody wants to draw on their past because they own it. I think it's a mistake, by the way, for any crypto traders or speculators to fixate upon speculating and trading this thing. It's going to be like trading Apple stock in the year 2010. It's like you might like buy it for $1.15 and sell it for $1.27 and brag to your friends, or short it at $1.42 and cover your short at $1.13. But ultimately, you're going to look silly if 10 years later it's trading at $120 a share, and someone's going to say, so you were doing what? You were making nickels when you could have actually made 100x or 1,000x that much money by actually investing in it?
Michael Saylor gets very annoyed by those questions, and some people, they just do not understand. To be a very successful investor, intelligence is not enough. You have to have something within you. You either have it or you don't. And unfortunately, most of the people do not have what it takes to be very successful in this game. Let me know, what do you guys think? Are you trying to time the market and miss out, or you have a long-term time horizon and become very successful? Leave your thoughts in the comment section below, smash that like button and subscribe.